Welcome back to DukascopyTV. Today I am joined by Olivier Gamrasni Åhlén to discuss the changes in the way that the banking sector is regulated in Switzerland. Olivier, thank you very much for joining me.
Thank you for inviting me.
No problem. Now, could you tell me and the viewers a little bit about these regulations and the challenges that they are likely to bring?
Well, I mean, since the crisis in 2008, I think the entire financial industry is facing very high regulations, and that is increasing and it will increase in the next couple of years. The biggest challenge here is that it will probably affect drastically the potential for banks or financial institutes to innovate. At the same time, there's always two sides of the coins. I would say the positive thing is that it will probably make the overall control and management and the risk management more transparent. It will increase the equity of most of the banks simply because they will have to deleverage drastically. And on the client side perspective is, of course, probably have healthier banks they are working with. Now, of course, we have to see the fact that this will affect and impact drastically also the overall profitability, and that's the biggest challenge today.
Okay. Now, with regards to tax, the US government wants US tax investigations to be dropped in exchange for payment of fines and also the transfer of client details. There's also the concern, however, that these could lead to further demands from the US on the rest of Switzerland's banks, so the 300 banks that there are in the country. What are your thoughts about this?
Well, it's a dramatic situation, I would say. I mean, the thing is that most of the, I would say, representatives of the banks in Switzerland are unable to really negotiate with the US authorities. That's our government doing this. And if you read the newspapers and the media, everybody knows that we consider, at least in the banking industry, that way too much information has been provided. And today, I'm quite keen to see in the next couple of days what's going to happen with the name of employees or clients provided to the US authorities, especially that if we go back to the origins, it concerns only a very few banks and not the entire country.
Mm-hmm. Of course. Now, some people are saying that there might be a huge outflow of assets from Switzerland as authorities from Europe and also the US begin their pursuit on tax dodgers. Do you foresee this happening? And if so, how would banks in Switzerland take action? What action, should they take to avoid feeling the pinch?
We SEB as a group, we're not affected at all by that. Simply, I know that a lot of people was expecting lots of outflow of assets. Practically, it was much less than expected. The reason is probably that, considering that the crisis is worldwide, people are more keen to leave their assets with in countries where politically stable and with banks that are solid. I think the biggest challenge now is with Basel III, and everything that we know about that.
Could you tell us a little bit about Basel III and just how the changes that that's likely to bring, do you think?
Well, I think it's necessary when after the Lehman, even though Lehman Brothers was an investment bank and not a private bank, I think it's necessary for everyone to know that you're working at all the banks are solid. The too big to fail concept is excellent, but not realistic in many ways. And on a personal basis, I would think that it would be necessary now to separate the investment banking unit from the private banking one. And despite the perception that investment banking are constantly losing money, are taking too much risk when it concerns only, and most of the time, only the proprietary trading.
Okay. Now, some are saying that as many as 100 Swiss banks could disappear by the end of the year. What do you see in terms of the future for banking in Switzerland?
Well, more importantly, I would say banks today have to revisit their business model, and that also concerns the overall cost income they have. So, of course, logically, because of the increasing cost of the regulations and the compliance, and because many banks have dropped their offshore activity and they are stuck with all the cross-border activity as well, a lot of banks might probably decide to disinvest themselves from Switzerland. But I see that the biggest challenge will be among family offices and independent asset manager in Switzerland, where I expect at least 30 to 40% of them disappearing or having to joint venture or be bought by banks.
And in your opinion, will banks be able to adapt, do you think?
The question is not whether or not they will be able. They have to. They have to. Those that they cannot, and obviously if they don't have any critical mass, also I don't like the term, will simply disappear or decide to merge with another one. There's a good thing there that we might see a healthier bank and hopefully with more ethics, because that's the biggest challenge for the next couple of years now.
Okay. And with regards to SEB, do you have what's your short and long term outlook for the bank?
Well, SEB has an excellent and very strong balance sheet, I would say, and we are currently more investing than is investing ourselves. The reason by that is that we have been very cautious the last few years where we've been investing, and so I mean our future is so far bright for us.
Excellent, very nice positive outlook. Good to hear some good news there. Thank you very much for your time,
Thank you.
Olivier. Thank you. Sadly, that's all we have time for at the moment, but do stay with Dukascopy for more interviews and the latest updates. But for now, goodbye.